Hello everybody and welcome to the midweek market update from Smack the Markets for the 24th of June. So this week so far has been quite a quiet week. It certainly hasn't been helped with the light sort of fundamental schedule, and that's not going to improve as the week goes along either. There are rising concerns over the US COVID-19 infection rates, which seem to be increasing, and also how much more risk on sentiment traders have left after the recent rallies. So let's take a look at a few markets that we discussed on Monday and the opportunities that we're looking at, some of the opportunities we're looking at going into the second half of the week. So if we come across to the Dow first of all and take a look at the sort of 4-hour chart here, we can see that really from this week, the market hasn't really managed to pick up an awful lot of additional positive momentum. The market still stayed, or it couldn't complete this trading window up from 26 up to 26,600. It's rolled over here. It's now underneath that key 26,000 level. And really from a trend perspective, it's looking sort of very boxy and very sort of sideways choppy within this sort of sideways range now. Now, it's in this sort of window here from 26 down to 25,500. That's the next sort of key level really on this market, as you can see. And not a great deal in there in between that either. Underneath this area, there is the next sort of levels that we've used for trading opportunities many times before. It brings it down to 25,200 and then down to that sort of 25 sort of key level. So I think we've got some very well defined structure here, although unless anything sort of changes, these markets really sort of need some sort of excuse to be able to, or some sort of reason in order to be able to make some sort of decisive move either way. So for us, really, what we're looking for here is really just intraday opportunities at the moment, and certainly looking at these key levels if the market can get through these key levels or trade into these key levels. Now, let's take a look at gold that we discussed on Monday. Gold has continued to move on. Again, if we take a look at this on the 4-hour time frame, the two key levels that we were interested in on Monday were the 1760 level here and the 1750. The market managed to pull back into the sort of 1760 area. Didn't really get back into 1750, but then we've had this sort of sideways sort of choppy action until recently. Yesterday we had the bit of a move and the breakout from here. Now, from a long side perspective here, I think the market could, or the easy move here really is up to that sort of $18 level here, 1800 level, I should say, for gold. That looks like where the market is moving to. If we take a look at this on the daily, you can see here. Now, once it gets up to 1800, then things get a little bit more sort of difficult, because the market has sort of rejected off this level here or off this sort of zone here a couple of times before. But it looks like we're getting a move up there towards that 1800, and we could see that early or in the remainder of this week. Now, if we come across to the Forex market that we discussed on Monday, we were looking here at CAD Swiss. We like the idea here of a potential opportunity from of a long perspective here. The number of reasons that we discussed on Monday, but there was a nice sort of level here, and there still is a nice level, but the market's broken underneath that now. So the idea of the sort of potential opportunity with having a stop underneath that level, targeting higher prices up here towards that sort of 72 price point, is now looking sort of less possible. Again, you can probably see this a little bit more clearly here if we take a look at it on the 4-hour time frame. We had that nice level here. The market's now sort of sunk underneath this, and partly on the movement of the US dollar this week. Now, that brings us on to other opportunities that we're looking at this week as well. So if we come across and take a look at dollar yen, we'll see that if we have a look at this on the daily time frame, first of all, we can see that dollar yen, similar to CAD yen, or CAD Swiss, I should say, has been in a rather tight consolidation around this 106.70 level. Now, yesterday the market managed to break through there and test the 106 price point, which again you can see from a macro perspective has been a very significant level. So it's bounced off that technical level and now it's pulled back just underneath the 106.70 breakout level. So from a trend perspective, the market's looking sort of better to the short side here. We've certainly got convergence to the short side at the moment as well. And again, if we come and take a look at this on the 4-hour time frame, things looking a little bit more clearer. Again, if we sort of zoom out of this, it's and apologies for the sort of context, but you can see the level here around 106.40, where the market's found key support and resistance before. Price action is just consolidating on top of that level at this moment. Above there, we had that sort of 106 to 106.70 to 106.80. Here a little bit tighter. You can see that level, and below that we have that sort of 106 area that we saw there on the higher time frame. So what we're looking for here effectively is looking for a break of 106.40 and looking for that trading opportunities within that trading window down to that 106 level. So there's a few opportunities there that we're keeping an eye on going into the second half of the week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.